Sempre me perguntam qual é o futuro do dinheiro. O dinheiro hoje representa 40% dos gastos das famílias. É um volume muito expressivo aqui no Brasil. Existem alguns países do mundo, por exemplo, os países nórdicos, onde o dinheiro tem prazo de extinção. Tem países onde eles já definiram que até 2030 não terá mais circulação de dinheiro, somente os meios digitais. Aqui no Brasil, esses 40% são representativos e a nossa expectativa, nós como GetNet, nós acreditamos que o Pix terá um papel muito importante em reduzir esse valor de dinheiro em circulação. Nós não temos dúvidas que o Pix pode ajudar a reduzir os custos. Nós sabemos todos que nós temos custos de transporte de moedas, custos de reposição de moedas, assaltos, violências, uma série de custos, né, que nós chamamos aí de parte do custo Brasil, e o Pix tem aí um objetivo. Então, nós, GetNet, acreditamos que aqui tem uma oportunidade de melhorar a eficiência no Brasil. Nós estamos vivendo no país um momento muito especial. Tem uma série de projetos definidos pelo regulador entrando, como o Pix, como a Lei de Proteção de Dados, como a Circular de Recebíveis, que regulamenta toda a parte de recebíveis digitais no país, o Open Bank. Eu não tenho a menor dúvida que este evento com o Exame pode ser um grande alavancador de um debate profundo e vai ajudar a esclarecer uma série de dúvidas para todas as pessoas e fortalecer alguns conceitos também sobre todos esses temas regulatórios que estão no mercado.
Se você entrasse numa máquina do tempo e voltasse 20 anos no passado e contasse a si próprio que no futuro você poderia trabalhar basicamente de onde quisesse, em qualquer lugar do mundo. Você poderia tocar times, projetos, muitas vezes empresas inteiras, sem nunca ir ao escritório. Que você concluiu que não precisaria mais ter carro, já que era mais barato e cômodo contratar carros com motoristas que chegariam minutos depois de você apertar um botão. Ou você poderia fazer uma videoconferência em tempo real, andando na rua com pessoas que estão do outro lado do mundo. E que, por exemplo, nas suas férias, você, que pagaria a conta do almoço com seu relógio e faria as melhores compras sem entrar em uma loja sequer, se hospedaria de forma mais confortável que num hotel, na casa de alguém que você nunca ouviu falar. Bem, você provavelmente acharia que você ficou louco no futuro, ou então que você tivesse, na verdade, 20 mil anos à frente e não apenas 20. O que acontece é que, diante de grandes disrupções tecnológicas, o avanço nos chega cada vez mais rápido, inventando um mundo cada vez mais futurista. Eu sou Marcelo Sampaio, cofundador e CEO da Hashdex, a maior gestora de criptoinvestimentos e ativos blockchain do Brasil. E justamente por trabalharmos com investimentos em tecnologia, muita gente nos pergunta sobre o futuro do dinheiro. Aqui na Hashdex, acreditamos que se nos últimos 20, 30 anos a internet da informação mudou completamente as nossas vidas, nas próximas décadas, blockchain, também chamada internet do dinheiro ou internet do valor, provavelmente mudará nossas vidas ainda mais. Se tem uma coisa que o passado nos ensina sobre o futuro, é que o futuro não é sobre certezas, mas sim sobre possibilidades. Isso em investimentos se mostra ainda mais verdade. E é isso que exatamente nós fazemos na Hashdex. Nós permitimos que investidores de todos os tipos ganhem acesso a esse futuro possível. E tudo de forma simples, completamente segura e 100% regulada. Para nós, é uma grande honra fazermos parte desse evento da Exame, que visa aprofundar essa discussão tão importante sobre o futuro do dinheiro.
A corrida pela inovação está cada vez mais acirrada, detalhada e principalmente personalizada. Na era da experiência, é necessário criar soluções que conversem diretamente com os consumidores, evidenciando de maneira simples como determinado produto otimizará sua rotina e auxiliará em atividades do dia a dia. E nesse cenário, que os smartphones com telas dobráveis ganham destaque e se posicionam como uma forte tendência tecnológica nos próximos anos. Em 2020, com a primeira versão do Galaxy Fold, a Samsung foi pioneira em comercializar no país um smartphone com tela dobrável. Ainda nesse ano, lançamos por aqui o Galaxy Z Flip e nesse segundo semestre apresentamos nossa terceira geração de smartphone com telas dobráveis em apenas um ano, o Galaxy Z Fold 2. A Samsung tem inovação no DNA e, como líderes de mercado, temos a responsabilidade de oferecer às pessoas novas maneiras de se comunicar, novas estratégias para trabalhar e novas formas de se conectar. E seguimos firmes nesse propósito, ouvindo atentamente o feedback de nossos consumidores para continuarmos antecipando tendências e superando todas as barreiras que a vida nos impõe. E é com essa visão de futuro tão instigante e motivador que damos as boas-vindas a todos a esse grande evento da Revista Exame.
Você quer entender como as novas tecnologias impactam a forma como você se relaciona com o seu dinheiro? Continua aqui com a gente no Future of Money. Um abraço.
Fala pessoal, tudo certo? Desculpa aí, estava no mute aqui, vamos começar de novo. Sejam todos muito bem-vindos ao Future of Money, é o nosso 5º dia aí do maior evento online sobre o futuro do dinheiro da América Latina. Eu sou o Nicolas Sack, para você que não me conhece, sou o Head de criptoativos aqui da Exame e o Head também do Future of Money. Antes de mais nada, queria pedir desculpas aí para todos que nos acompanham, porque tivemos alguns problemas técnicos para começar, mas já foi resolvido, então vamos tocar essa live com muito carinho, com muito amor. Hoje é um dia muito especial, porque a gente vai ter vários convidados de honra se juntando a nós, né? Você que nos assiste de todo o Brasil, obrigado por estar aqui, eu tenho certeza que você vai aproveitar muito esse conteúdo que a gente está trazendo, e eu confesso que para mim é uma verdadeira honra trazer um debate de tão alto nível, né, nível profissional, sobre criptoativos de maneira totalmente acessível para você aí assistir da onde você estiver. Prepara a pipoca, porque hoje o dia vai ser longo, a gente vai ter vários debates bons aqui. Vamos começar aqui com o Matthew Hougan, que é chefe de research aí, mundial da Bitwise, né? Ele fundou a Bitwise há um tempo, já vou deixar ele se apresentar um pouquinho melhor para vocês, mas para quem não conhece ele é um dos pioneiros no mercado de ETFs, são fundos de índice, né? Então, são investimentos via índice, é um instrumento de investimento, e nos Estados Unidos o Matt é super pioneiro nisso, né? Ele foi CEO e fundador do site ETF.com, ele criou o primeiro sistema de ranqueamento, né, de rating de ETFs, ele foi o chairman e CEO da Inside ETFs, a maior conferência de ETFs do mundo, e foi 3 vezes membro da Barron's ETF Roundtable. Muitas das narrativas que a gente ouve nesse mercado, ligadas a investimento institucional, esse tipo de coisa, são boa parte provenientes do Matt. E a partir de agora a gente vai mudar para o inglês. Caso você queira, você poderá acessar a tradução simultânea que vai aparecer aqui no site. E vamos lá, então. Switching to English, Matt, it's really an honor having you here. Welcome to Future of Money. I will let you introduce yourself, and the stage is all yours. Thank you.
Oh, thank you so much, Nicholas. Thank you, everyone, for joining me here today. I'm really excited. I have to say, I go to a lot of conferences on money. I go to a lot of conferences on crypto assets and blockchain. This is the single most impressive speaking faculty that I've seen put together, and I feel really honored to be a part of it. So thank you so much for the invite, Nicholas. Thanks for everyone for dialing in. I also think this may be the most important moment to be hosting a conference like this, because crypto, Bitcoin, and blockchain are transforming right before our eyes, from something that has existed on the sidelines to something that is moving aggressively mainstream. Today, I want to talk a little bit about that moment, because I think it's really important, and it's a fleeting moment that investors who are on the cutting edge have a chance to get in ahead of the majority. I want to talk about why I think that is and what that will mean for 2021. And I want to talk a little bit about funds in the crypto asset space, ETFs and the efforts to develop ETFs, and my own history. So I'm actually going to share my screen now. I have a presentation, and if you give me 1 second, we're going to share my monitor, and then we'll put the presentation up, and we should be good to go. Nicholas, feel free to jump in if it's not showing. But here I want to talk about the outlook for Bitcoin and crypto in 2021 and why I think this is the year that crypto goes mainstream. But before I do, I thought I'd introduce a little bit about where I am coming from and my particular background and tie in what I experienced in the ETF industry to what we're experiencing in crypto today. So as Nicholas mentioned, I'm the head of research and the chief investment officer for Bitwise Asset Management. Bitwise is a specialist crypto asset manager created in 2017 that created the first and today runs one of the largest crypto index funds in the world, the Bitwise 10 Crypto Index, which holds the 10 largest crypto assets weighted by market capitalization, with all of the money stored in, with a third-party institutional custodian. We're focused in the US on the financial advisor marketplace, occupying somewhat of the same niche that Hashdex is doing a great job occupying in Brazil. And I'm a big fan of that company as well. Bitwise manages about $130 million in assets for hundreds of investors and primarily financial advisors. We're well known in the space for a number of things, for having created the first index fund, a fund that Bloomberg calls the S&P 500 of crypto, for having done some breakthrough research that's been featured on the front pages of the Wall Street Journal on the status of volume and separating real from fake volume in the crypto market, on pushing forward on an ETF. We've been leading the ETF effort in the US, and I'll talk a little bit about that. And also for assembling a group of backers that's among the top tier. So we are a venture-backed company supported by firms like Khosla Ventures, General Catalyst, and Highland Capital. And we're fortunate to have a number of advisors and investors involved in Bitwise with incredible pedigrees. People like Shrikant Dash, who is the former head of indexing at S&P, who developed Bloomberg's indexing business, and now who provides advice on the construction of our indexes. People like Rick Arney, who is the head of alternatives for BlackRock, or Allison Davis, who is the CFO. People like Rick Edelman, who runs the largest financial advisory firm in the world, I believe, with over $200 billion in assets under management. And legendary investors like Naval Ravikant, who created AngelList, and we're proud to have as an investor here in Bitwise. Nicholas covered my bio a little bit, but my history until 2017 was in the ETF industry. So I was one of the early employees and eventually the CEO of ETF.com, which was the largest integrated media, data, and events business in the ETF space. We grew from 2 people to over 60 before we sold the business in 2015 and 2016. While at ETF.com, I had the fortune of developing the first ETF analytics and data system in the world. That ETF analytics and data system now powers all of FactSet's ETF research. We were the people who came up with statistics you see everywhere today, including tracking difference as a core measure of ETF quality. I was a 3-time member of the Barron's ETF Roundtable. I got to give an ETF 101 talk 1,000 times to audiences in 20 different countries around the world. And I was fortunate to be able to write the CFA Institute's research piece, or co-author their piece, on the guide to exchange traded funds. I left the ETF industry after I sold that business because I saw echoes in the crypto space for what happened in ETFs. And I saw the potential to do some of the same things. When I moved over to the crypto market in 2017 and 2018, the quality of information in this space wasn't perfect. And I think I, together with the other team on the research team here at Bitwise, have been able to contribute to that. And fortunately, with my colleague, recently co-authored the CFA Institute's first piece on crypto assets as well, which should be published in January, the CFA Institute's Guide to Bitcoin, Blockchain, and Crypto Assets. I did want to talk a little bit about the ETF industry to provide some context and maybe some comfort for where we are in crypto's journey. This is a slide of US ETF assets. You can see them going from essentially nothing in 2003 when I joined the ETF industry to over $4 trillion today. ETFs are now like mother's milk to investors. They are at the core of how most investors in the US allocate their portfolios, whether they are institutions, financial advisors, or retail investors. They are taking over share from traditional mutual funds hand over fist. But what some people don't remember about ETFs is that that wasn't always true. When I got involved in ETFs in 2003, People called them EFTs. People didn't know what they were. In fact, a lot of people were terrified of them. No one talks about these headlines, but from 2003 to the early part of the next decade, ETFs were often vilified, questioned, and demonized in the media. There was a US congressional hearing about ETFs and whether they were disrupting capital formation or ruining our markets. The Kauffman Foundation, a major nonprofit in the US, talked about the systemic risks raised by ETFs. The New York Times was talking about ETFs and quoting people calling them new weapons of mass destruction. Some of my heroes, folks like Jack Bogle, dismissed them as fool's gold that were leading investors astray. Over time, of course, all of these people came around to ETFs as something that were helping investors lower costs and build more portfolios, better portfolios. I'm reminded of this beautiful quote from a book called A Fault in Our Stars. I fell in love the way you fall asleep, slowly and then all at once. That's the way it felt in ETFs. Slowly, 15 years of sort of laboring on the edges of people questioning ETFs, and then all at once, they became the center of attention. You know, there is a famous slide, a famous chart in Silicon Valley. It actually comes from a 1991 book called Crossing the Chasm by Jeffrey Moore. And it's probably the single best chart to this day for understanding how new disruptive technologies move from the edges into the mainstream. And what Moore said was that every technology goes through 5 separate phases. First, it's adopted by innovators, which are a tiny fraction of the market. These are the techno geeks who love the hot new thing and are willing to work with something before it's mature. Then they're early adopters, which I would classify everyone on this call as an early adopter in crypto. We're willing to invest time, energy, research, effort, money into understanding a new thing before it's made the leap to the mainstream, when it is still a promise for the future, when you can taste what it could do for society, but you can't feel it every day. After that, there is the early majority. That's when technologies explode into the marketplace. And then there's the late majority and finally the laggards. If you think about the ETF industry, it was developed to facilitate trading on the American Stock Exchange. The American Stock Exchange was a small stock exchange. It was struggling to compete with the New York Stock Exchange. And they came up with this idea: I could trade a basket of equities with the single push of a button. And that would bring new volume to this exchange. And the first users were just institutional investors for whom an ETF was slightly easier than, say, buying 500 individual stocks. Then it spread to early adopters. These were people who loved one aspect of ETFs. At this time, say 2003 to 2008, when I was first involved in ETFs, most of the time, most investors would have been better off buying a mutual fund. ETFs had wide spreads. The all-in costs, if you were trading, were relatively high. But there were a few people who either could see how efficient and low cost they would be, or really valued one aspect of ETFs, their intraday liquidity. And they helped grow the market. And then around 2008, ETFs made this leap into the mainstream. And that leap was driven by the development of fixed income ETFs and by the financial crisis of 2008, where people suddenly realized that they didn't want to trade mutual funds at the end of the day, that intraday liquidity was something that they deserved. And after 2008, the ETF industry went quickly from less than $1 trillion to the $4 trillion it is today, and will be $10 trillion down the market. Now, this curve, this step applies to every new technology. If you think about the internet, developed at universities and in the military. It then spread to corporate America, who used it for file sharing, even when it was clunky and imperfect. It caught fire with the majority when we developed things like email and Google that made accessing the internet easy. Then you had Facebook and video streaming that brought it to the late majority. And today we are penetrating the laggards. There are still 5% of people in the US who don't access the internet, but soon we have captured everyone. The important thing about this slide is there is this step called the chasm. And the chasm is where any new technology goes from the early adopter market to the early majority market. The early adopter market is willing to tolerate clunkiness. They're willing to tolerate glitches. They're willing to tolerate issues in exchange for what may come in the future. But that you can't cross the chasm and go to the majority until you have a fully functioning product. The internet couldn't go from corporate America to mainstream America until we had email that made it easy to send information to friends, until we had Google that made it easy to search the internet. ETFs couldn't cross over to the early majority until we had the ability to build all of our portfolios in ETFs. What's happening in crypto right now, the moment I described at the beginning of this presentation, is that we are staring at that chasm. We have gone from the innovators, the early adopters, the cypherpunks who were tinkering with this new technology before it made economic sense to do so because they thought it might build a better financial background. Then we moved on to the early adopters. We had we had exchanges like Coinbase develop. We had new funds launch. We had some education. And what we're doing right now is seeing if we can cross over to the early majority. And if we do, it's going to be like that quote, like the person who fell in love slowly and then all at once. And we're getting close to that all at once. And I want to talk a little bit about that and then come back to the question of ETFs at the end. I do think it's important to note that the year we have just been through has been a transformational one for crypto. And we hear this every day in the conversations that we have with advisors, with institutions, and with hedge funds. Now, part of this is performance, right? Bitcoin and crypto assets are the single best performing asset class in the world this year. Bitcoin is up about 90%. While we were waiting to start this call, it broke above $16,000 in the US. That's about 4x, 3 to 4x the return of gold. It's miles ahead of things like the S&P 500 or international stocks. And of course, oil has been crushed. But it wasn't just the best performing asset class this year. Crypto was the best performing asset class of 2019. It's been the best performing asset class since 2017. It's been the best performing asset class since 2015. Bitcoin is up 4,000% since 2015. And people who tell you couldn't allocate to Bitcoin in 2015 are wrong. There were funds available that helped institutions allocate into the space in 2015. It was just extremely early. Now, I get a lot of questions about what's driving these incredible returns this year. And the answer is really simple. And it speaks to us potentially crossing that chasm. Crypto assets like Bitcoin and Ethereum are really just commodities driven by supply and demand. And there is just simply more demand. What do I mean? If you haven't been paying attention, we've had all these new classes of investors move into crypto for the very first time. Famously, hedge funds moved into crypto over the last 6 months. This is a slide from Paul Tudor Jones, one of the most famous hedge fund investors in the world. There's probably only one better known hedge fund investor. He allocated 2% of his portfolio to Bitcoin in May of 2020 after he started worrying about inflation and identified crypto as the best hedge. He is not alone. I said he was one of two, the most popular, the most well-known hedge fund investor in the US right now. Stanley Druckenmiller just said 2 days ago that he's allocating to Bitcoin as well. At Bitwise, we've seen tens of millions of dollars flow in from hedge funds over the past few months. So hedge funds are moving into this space, but not just hedge funds. Corporations are now allocating to crypto. Just this year, we've seen the first 2 publicly traded corporations in the US make allocations to crypto assets. MicroStrategy buying $425 million of crypto for their treasury to hedge against inflation. Square buying $50 million of Bitcoin because it aligns with the company's purpose. Just these 2 purchases alone are 20 basis points of all the Bitcoin that will ever exist. And I expect to see tens and dozens of other corporations follow suit. But it's not just hedge funds and corporations. This year, for the first time ever, Main Street, Wall Street analysts are openly advocating for crypto. This is not something that happened a few years ago. Just a few weeks ago, JP Morgan, whose CEO called Bitcoin a fraud in 2017, wrote a piece in their flagship research report saying Bitcoin is competing with gold and it could 2 to 3x in the next handful of years. Bloomberg senior commodity strategist, a gentleman I've known for 20 years who's been covering the commodity markets before crypto assets existed, recently put a $100,000 potential price target on Bitcoin. He said the other day it will reach a new all-time high in 2021 if trends continue. But it's not just hedge funds and corporations and traditional Wall Street. It's also financial advisors who control the majority of wealth in the US. We just hosted a financial advisor webinar at Bitwise a week ago, the day after the US elections, a busy day in the US for financial advisors serving their clients. We had 1,000 financial advisors, 1,000 people register to attend that event. They are coming into this market. And of course, the retail investors who supported crypto all along are still here. There are more Coinbase users in the US than there are users of the 4 largest brokerage services, Charles Schwab, TD Ameritrade, E-Trade, and Interactive Brokers combined. So you have retail, you have financial advisors, you have corporations, you have traditional Wall Street, you have hedge funds, and they are all coming into this market, and they're driven there by concerns, rising concerns about inflationary risks, not something the US has wrestled with in 30, 40 years. But there is rising concern with the dramatic fiscal stimulus and the dramatic monetary stimulus that we have a fatter tail of potentially inflationary outcomes, and people are looking for hedge. They're falling headline risks. I'm going to talk about that in a minute. And there's the surging growth in DeFi. So there is huge new demand, and it's coming at a time where there's less supply. As we all know, Bitcoin went through its halving in May 2020. That means that less new Bitcoin is being produced every day than was produced at the beginning of this year. How much less? About $4.4 billion in less supply. Now, historically, as this chart shows, the price of Bitcoin has appreciated in the year or year and a half following each halving. These take place every 4 years. This is a chart which looks at the price of Bitcoin in the year following the 2016 halving in green and the most recent halving in the darker shade of green. And you can see that we're actually tracking ahead of what happened last time in terms of price appreciation. And it's not just the halving. People are also holding Bitcoin for longer. This is a chart that looks at the amount of Bitcoin that's moved over or hasn't moved in 1, 3, or 5 years. And you can see the amount of Bitcoin that's been static for over a year has gone from 50%, 40% of all assets to 60%. We've also seen the amount of Bitcoin on exchange go down rapidly. And it's not just Bitcoin. Other major assets like Ethereum are expected to go through a similar supply reduction. And so you have this massive new demand coming from the entry of all these traditional investors who have historically not been in the market, meeting less supply. And it's not surprising that prices have gone up. But the important factor, and the one I want to focus on in the last few minutes of my talk, the thing that's caught even me off guard, is the speed with which crypto has been normalized in the past year. We've seen things like regulators aggressively separating the market into good crypto and bad crypto. We had the leading controller, the leading regulator of the currency in the US, state that all federally chartered banks may now provide custody services for crypto assets. So firms like Wells Fargo and JP Morgan have effectively a blessing from the controller of the currency to custody crypto side by side with dollars. At the same time, we have regulators issuing enforcement actions on the legacy parts of crypto, things like BitMEX, an exchange known for offering 100% leverage on crypto assets, which faced criminal charges in the US. So regulators are removing the riskiest parts of crypto and emphasizing the most exciting parts. But it's not just regulation. Custody, which used to be a huge issue in crypto assets, has now been largely solved if you're working with gold-plated providers. Firms like Fidelity now provide custody for crypto assets. They often have insurance from groups like Lloyd's of London. These are among the most respected and established names in finance in the world, and they're now in this market. And it's not just regulators in custody. It's, of course, as I mentioned, Wall Street researchers beginning to take crypto seriously. And then even more recently, just a few weeks ago, PayPal announcing that it was going to allow all US users and soon international users to access and purchase and hold Bitcoin, Ethereum, Bitcoin Cash, and Litecoin, and potentially more assets in the future in their PayPal account. That's 200 million users. By comparison, the largest single Bitcoin wallet today is about 40 million. So this could multiply the number of people accessing crypto overnight. And that's rolling out right now. What's more, next year, they're going to enable crypto payments at 26 million retailers in the US. And it's important for people who have been in the financial industry who may have gray hair like me to realize that PayPal is a financial giant. Its market cap is bigger than Bank of America. Its market cap is bigger than Morgan Stanley. It's bigger than Wells Fargo. It's 4 times as large as Goldman Sachs. A company of this size saying crypto, blockchain, Bitcoin are part of the future of money. And they're going to enable 200 million US users and over 300 million users around the world to access them from the ease of their phone is an incredible moment. I want to close by talking a little bit about this chasm and ending on the ETF. As a reminder, the key step in any technological growth, the moment where the most exciting capital formation, the most exciting penetration happens, is when it moves from the early adopters to the early majority. And some technologies never make that leap. VR is a good example of a technology that's been stuck in this chasm for 20 years. A lot of people would argue that AI, parts of AI have been stuck in this chasm, although they're finally starting to emerge. But this is a big deal. And those of us who have been in crypto for the last handful of years have been wondering, what would it be that would drag crypto across the chasm? What would it be that would make it so it was part of an everyday conversation that millions of people have, not just inside the crypto industry, but outside? What would it take to become not one story in the Wall Street Journal every 3 months, but something that has a assigned reporter in the journal? What would it take to cross the chasm? And I think what we're learning in 2021 is it's taking a number of things, but it's happening really fast. So PayPal bringing 200 million users into the market is a big deal. And that is happening as we speak. PayPal just eliminated the wait list to open this up on your app. They said the demand for this was 2 to 3 times their expectations. But it's not just this. Also, as I mentioned, the emergence of a pressing need to protect portfolios against inflationary concerns in developed markets, a need that's been felt in emerging markets for some time, is really moving this to the forefront. I speak with major endowments and other institutions all the time, and they are reassessing the need to protect their portfolios against inflation and the most efficient way to do that. And many of them are ending up in crypto. And 2 more things, and then we'll close with the ETF that I think will help us cross this chasm in 2021, is we're getting close to all-time highs. You know, a lot of people became dismissive of crypto after 2017, after the market retraced by 70%, even though that had happened 5 other times in Bitcoin's past. Now that it is moving back up, now that it is within a few $1,000s of that 2017 high, despite market media web searches for crypto and Bitcoin not being anywhere near they were, could bring a whole new wave of investors into the market once we eclipse that. The last 2 things, maybe the most fundamental, we're going to see significant action on central bank digital currencies in 2021. The European Central Bank is looking at a digital euro. The Fed is looking at digital currencies. China has already conducted experiments with its own digital yuan. $3 billion transacted in a period of a few weeks using their experimental digital version of their core currency. This is going to put crypto assets and the idea of digital currencies in the pockets of nearly everyone, I think, in the next 5 years. And then we get to the last piece, which I know there'll be questions about, the outlook for a Bitcoin ETF. Now, it's important to say that the US is a laggard in this area. There are already Bitcoin ETFs in market like Switzerland, in parts of Europe, one recently listed in Germany, and it's gathered significant assets. Bitwise has been involved in pushing for a Bitcoin ETF for a number of years. I think it's important to note that many investors can already gain access to Bitcoin through a variety of means. Bitwise and other firms offer private placement funds that people can buy. People can open up Coinbase accounts or go to another issuer and access crypto that way. Bitwise offers an index fund as a private placement. Some of these are traded on the OTC markets and can be accessed through brokerage accounts. The important thing about a Bitcoin ETF, though, if and when it happens, and I think it is a matter of when and not if, and we continue to have meetings with the SEC on a regular basis, is that is a perfect example of what drags an investment idea over that chasm from the early adopters to the mainstream. Again, I'd go back to that slide. Just keep that in your mind. Early adopters are willing to deal with hassle. They're willing to deal with glitches. They're willing to deal with issues. And currently, all of the funds that exist to access crypto assets have a little bit of hassle. Even Bitwise's. If you come to Bitwise, there's a relatively high paperwork burden. In order to open an account, you have to be accredited, and it takes a little bit of time. With an ETF, it's easy. It's easy. It's push button access. And I think we're getting very, I don't know if we're getting very close. We're getting significantly closer every day. So I wanted to end there and save maybe 5 minutes for questions. I'm going to end my slideshow here, but I would just say this is a really exciting moment. It's a really exciting moment for crypto. It's a really exciting moment for money. And it's a really exciting moment, I think, for the people on this call, because you're just ahead of a significant wave.
Thank you, Matt. Let's open for questions and answers then. If we don't have any questions, I would like to address some to you. You spoke a lot about crossing the chasm and with this new asset class. Here in Brazil, we have some skepticism from accredited investors and institutions. And in terms of acceptance and awareness about crypto assets here in Brazil, I believe that we are a few years behind US and other economies such as Switzerland. And I would like to know, in your opinion, how the perception of these big players can shift.
Well, I will say, I don't know that you're behind. There has been a fair amount of skepticism in the US. And an important thing to note, to go back to that quote that I threw in there, slowly and then all at once. 6 months ago, when we would sit down with an endowment, it would typically be a junior person. There'd be high levels of skepticism at the higher levels. And the level of questions were stuck on things like, will crypto disappear? Will the government seize crypto? Is it only used by criminals? I will say in the last 6 months, that has all gone away. And now we're getting engagement from some of the largest banks in the world, from some of the largest broker dealers in the world. So I guess my message to you would be, it can happen faster than you think. It feels like it's miles away, and it felt like it was miles away in the US even 6 months ago. And then overnight, your calendar can get filled with calls from the most senior people. So I do think it's a process, but I think that concept of slowly and then all at once is something we're experiencing in the US, and I would not be surprised if you experience it to some degree here in Brazil.
Nice. And if you want, could you address a little bit more about how SEC is currently looking to the ETF that you guys and other financial advisors are creating, these new types of instruments? How SEC is looking to that, and how do you believe this will evolve with this new
That's a great
election
question.
in the US?
I think it's important to note, people have been trying to launch an ETF since 2013. And in 2013, there were a huge number of issues. So trading was very inefficient. Custody wasn't regulated. There was no insurance on custody. There was no process for auditing crypto funds. The problems were like a mile wide. We've narrowed those down. So custody, I don't think, is now a major issue. Audit has been solved by and large. Trading has become extremely efficient. The last piece that is blocking the SEC, and they're continuing to study, is whether the underlying markets can be manipulated and whether there is sufficient surveillance. That's a US requirement. You have to be able to surveil the markets to ensure that that manipulation doesn't occur. And people, including Bitwise and Van Eck and other great firms, are really focused on that. I think we're getting closer. You asked a great question about the election. One thing about the SEC, they continue to study things during transition periods, and we're in a transition period now. You rarely see major product breakthroughs So I would expect 2021 to be a very exciting period in terms of Bitcoin filings and potential progress at the SEC. But I wouldn't hold my breath for the next 2 months. We're still, sorting out the presidential transition and other issues.
Okay. We also have a question from our audience, from Ricardo Menezes. He asks if you think that CBDCs will try to dispute space with
that is a
crypto
great question.
like Bitcoin.
Thank you so much, Ricardo. The way I think about crypto assets and blockchain is they do three things. So one, they allow for extraordinarily fast settlement, right? You can send $1 billion in Bitcoin and it'll settle in 10 minutes. If I were to try to wire you $10,000, Nicholas, from my local bank, it would get there in 4 days. So extraordinarily fast settlement. Two, they let you program money. So you can program money to serve as an escrow agent, a lending agent, to replace high-priced bankers and IPOs. We see that in Ethereum. And three, you can have sort of digital property rights. People talk about Bitcoin as digital gold, digital property rights and digital scarcity. Digital scarcity, CBDCs can't compete with, right? So the digital gold use case that is the primary driver of Bitcoin's value requires something that's decentralized and not controlled by any government. So I think that's safe. Programmable money, I think, faces more disruption from central bank currencies, and settlement faces significant disruption, right? So I think you have to talk about use cases and different assets, and it'll affect things differently. The good thing about something like Bitcoin or even Ethereum is that the use cases that are shielded from central bank disruption are large enough to justify prices that are significantly higher. I think when you talk about payment-focused crypto assets, so XRP may be the best known one, they face more direct competition. That's a relatively complex answer, but the space is somewhat complex as well.
Sure, and that leads to my next question. Do you believe in an intersection of the traditional finance, fintechs, and the crypto landscape companies?
Absolutely, and it's happening right now. You see JP Morgan developing their own blockchain solution. They have their own crypto asset. Look, I think if you want the soundbite for what crypto and blockchain is about, it's about allowing money to move at internet speeds. It's about moving money onto the internet. And we don't think about how ridiculous it is that hasn't happened yet. I mean, how absurd is it that if I go into my, US bank account and pay my internet bill, it takes 5 days for the money to get there? That's ridiculous. So what crypto allows you to do is to move money onto the internet. You're going to see every major financial institution move into this space. You're going to see Visa move into this space. You're going to see JP Morgan move into this space. You're going to see the largest institutions in Brazil move into this space. They all have to. Just like you saw every retailer develop an e-commerce site. You saw every telephony company develop VoIP services. You saw every media company, every TV studio develop online streaming. You're going to see every major financial institution move into and embrace internet money, which is and can only exist with blockchain technology and with crypto assets. Nice.
Matt, once again, thank you for this amazing speech, but unfortunately our time is up. I will switch back to Portuguese to make my final considerations, but thank you very much. I hope we can make this one more time in the future.
I would love to. Thanks for inviting me, and thanks everyone to listening today. Really exciting to be here.
Thanks, Matt. Pessoal, obrigado a todos pela audiência. Espero que vocês tenham gostado da conversa que a gente teve com o Matt. Logo em seguida, a gente vai ter mais um painel com Dan Morehead, que é um cara muito bom também. Ele é do Pantera Capital, que é o maior venture fund do mundo aí de criptoativos. O link para a live vai estar disponível aqui no chat ao lado. Não deixem de conferir. A gente vai começar logo, agora em seguida. Muito obrigado a todos. Um abraço e até lá.